Hello and welcome to another Smaulgld live stream. It is Thursday evening, the 10th of January, 2019. And tonight's topic, the Trump pump and the Powell put on display again today. It's a concept we introduced last night, and we have been discussing it over time, how the stock market just seems to keep on ticking no matter what. Last night we showed you a chart of how we've had these bouts during this 10-year bull market where it looks like it's finally over and we finally have hit the point where the unsustainable levels of the stock market are just not going to be sustained anymore, and everyone comes out of the woodwork claiming they've seen it coming and they've predicted it, and then the stock market continues to head higher. All right, before we get into that story and some of the things that happened today with the chairman of the Fed, Powell, and some of the things Trump did today, let's take a look at the gold and silver markets and the crypto markets before we move on. All right, so gold today did not go up, and nor did silver. But as is typical, when gold has a bad day, silver has a worse day. Let's take a look at what happened with gold. Gold went down a little bit, went down $6.75, down about a half a percentage. So $6.75 down, and it went down to $12.86 currently. And after markets, it's up a little bit to $12.8770. So that $1,300 mark proving to be elusive, but we're not that far off. Silver, on the other hand, today fell over 1% today, 1.2%, down 19 cents, fell down all the way to $15.54, and was as low as that, closed on the low of the day, and currently it's at $15.56. And what did that do to the unsustainable gold-silver ratio, the one that's supposed to be 16 to 1, 9 to 1, 1 to 1? Well, went up a little bit again today. Still hovering over 80 to 1. Opened around 82.21. Got almost up to 83 to 1 today. As you know, my opinion on this is that ratio will stay high until gold is in a sustained bull market and silver follows. If you're going to tread water, it looks like when gold goes up a little bit, silver follows behind it just a little bit. And when gold drops, silver drops even more. It's not until gold really starts to move higher that silver will start to see those spiky moves. We haven't seen that now in 6 or 7 years. All right, let's take a look at the crypto markets. Very interesting today. Something that hasn't happened in a while. And it's not because the prices went down double digits, 10%. That happens every now and then. What was happening the last couple of weeks was that all the cryptocurrencies weren't moving lockstep. It's often the case that it's not just that they follow Bitcoin, but the top 20, 30 coins will all move in the same direction almost instantaneously. If one of them has a spike, they all have a spike. If one of them goes down, they all go down. But the last couple of weeks, we've seen some divergence in what happens, and it's almost as if they're individual coins with individual fundamentals or whatever, however people value these things. They seem to be valuing them on a case-by-case basis. Some were going up 6-7%, others were going down. We weren't seeing this, oh, they're all going up or they're all going down. And you often see, and what we saw early this morning was all of the cryptos just went bam, down and down hard, all at the same time. No, wasn't like, well, this one's doing a little better than that one. No, they all got hit, and they all got hit at the same time. So the price right now, Bitcoin is $36.33. That's down less than 10%, 9.63%. Ethereum down to $127, down 15%. Bitcoin Cash down 16.61%, down to $132. And Litecoin down to $33.25, down 14.27%. Litecoin had been the one that had gone up the most. Didn't go down the most, but had been close to 40. Was actually over $40 a couple of days ago. Now down all the way to $33.25. All right, what else happened in the markets today? Well, China is still in the news. China's struggling, and here's some of the latest news on China. China car sales collapsed. First annual drop in 20 years. Retail sales of passenger vehicles in China fell a dramatic 19% on the year, and SUV sales also fell 19%. Don't forget, gold-backed yuan game changer. Well, it doesn't look like China's weathering this storm very well. Other things we always talk about with China, the amount of debt that they take on. A lot of the gold pumpers always talk about how the U.S. debt is unsustainable and never talk about the Chinese debt, or they diminish the magnitude of it by saying, oh, it's just internal debt. They owe it to themselves. Well, the amount of debt that they owe to themselves is a prodigious amount, probably $50 trillion, maybe 30 to 50% of it is non-performing, and they do have a healthy amount of external debt, over $2 trillion. But today we learned that China is going to roll out more policies to boost spending on auto, home appliance, and, said NDRC official. And more policies, what does that mean? More incentives, more stimulus, more debt. Also, a discussion about possibility for People's Bank of China to buy A shares of stock or stock ETFs sparked excitement in the market. Some say it's more effective in stimulating consumption than construction of another railway. Now there's your choices that China has. Do we spend trillions of yuan on building another railway that no one needs, or a few more skyscrapers that no one needs? Or maybe we just buy stocks that no one really wants to pay for, but we'll be there to pay for. Now you're seeing this, and this ties into the Trump pump and the Powell put. China does it the same way. They do it even more. The amount of centrally controlling of their economy and their stock market is unbelievable. And this is not just China, and it's not just the United States. We see the Swiss National Bank does this. We see the Bank of Japan basically buys all of the government-issued Japanese bonds. We see the ECB buying so many bonds, billions and billions of dollars worth of corporate bonds. This is global. This is the financial system. This is the financial system run by central banks. And for anyone who thinks that China is not part of it, that somehow there's some Sun Tzu gold-backed sound money. No, China is probably taken to this whole concept harder than anyone else. And right now they're in a position where they're realizing at first that when you build your economy on stimulus, they realize that you require more and more stimulus to keep it going. And right now they're having trouble keeping it going at all. And they're at a dilemma. What are we going to do? Are we going to build more railways? Are we going to do my Belt and Road? What are we going to do? What are we going to build? Or should we just buy a bunch of stocks? And my prediction is they're going to do both. They're going to build more infrastructure. They're going to build more buildings. And all the American gold pumpers are going to say, well, they're so productive and they're going to crush the dollar. And now they've got all this valuable infrastructure, not realizing that infrastructure is a liability. When you borrow money to build stuff that no one needs, and then it doesn't produce any revenue, the money that you borrowed can't be paid back. And if your economy collapses, you'll never need those bridges and roads and 85 skyscrapers. They become a liability. There's still taxes to be paid on them. The debt has to be paid. But the government will tell them, you don't got to pay it. Just extend the loan them more money, or let's start a new project. Let's build 47 new skyscrapers. That's the state that China seems to be in right now, is in order to keep the economy going, they either have to continue building infrastructure, buying stocks, or trying to export their infrastructure building through the Belt and Road Initiative. What else happened today in the markets? I think we're almost ready. Oh, yes, we are. Oh, by the way, we are going to have, the date has been set for the David Morgan, Louis Camerasano debate. It'll be at the end of the month, hosted by Philip Kennedy. And the topic is going to be the merits of silver as a monetary metal. Now, many of you have heard my views on silver as a monetary metal. I'm not going to repeat them, and I guess you'll have to pay to see that. No, this is not a pay-per-view, but we will discuss that on the 31st, and we won't be covering that topic pretty much unless it comes up until then. All right, I think we're ready to move on now to the topic of the evening.
Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
All right, well, today's Moronica is this gentleman. He is a congressman from somewhere or another. And to make a point, he tweeted today, because Trump is ignoring the consequences of his ridiculous hashtag shutdown, Rep. Spire and I are taking garbage we picked up at our national park and delivering it to the White House. Our message is simple. And thankfully, the message is cut off. That is your representative playing garbage man at his national parks. Also, a very interesting story today out of Canada. Canadian scientists are finding powerful radio signals that they cannot explain where they come from, and they are claiming they come from distant galaxies. What is this all about? They're asking up there in Canada. Billions of miles away. And of course, now, finally, let's discuss just leaked from Dianne Feinstein. That's why I'm proud to introduce the assault weapons ban of 2019. This bill bans the sale, manufacture, transfer, and importation of 205 military-style assault weapons by name. I think she tried that once before. She was holding up an assault rifle. I don't think she knows what one is. Okay. Let's get into the Trump pump and the Powell put and what is going on. It reminded me today. This is Lisa Abramovich. I think she writes for Bloomberg, or maybe she writes for the Wall Street Journal. Doesn't matter. She makes some nice comments on Twitter. And she's noting the point here. This is not surprising, she says, but very significant. Trump reportedly wants a deal with China so stock markets rally. Yes, indeed. Trump is in charge of the stock market rallying. Every president since 1987, since they created the President's Working Group on Financial Matters. I think that's what it's called. That's not the exact name of it, but short name for it is the Plunge Protection Team. It was set up by President Reagan in 1988 in response to the stock market crash of 1987, and it brought together the Department of Treasury, the SEC, CFTC as a group that can meet to figure out what they can do to calm the markets down, or basically to reflate them in the interest supposedly of national security in a way, because that is an asset that the United States has. And every president has kept a sharp eye on the stock market. The dollar and the stock market are somewhat tied together as financial assets or weapons, because if you have a good dollar and everyone has the dollar, well, then they're not only going to buy U.S. treasuries, they're also going to issue debt in U.S. dollars, creating a demand for them. The whole concept that they're holding dollars just to buy oil, that is an antiquated concept, the petrodollar. They have dollars to also trade with the United States, who sells them, other countries, a lot of oil, but also to invest in the U.S. stock market. One of the main things that Saudi Arabia does, besides pricing its oil in dollars and only charging dollars for its oils, it invests massive amounts of money in the United States stock market. Twitter has a big Saudi investment. Many of the major companies out there, in the big names, have Saudi investment. So the stock market's very important to the United States. That's why you have the Plunge Protection Team. They're protecting the dollar and they're protecting the stock market. All right, so this Lisa Abramerson woman is saying that Trump reportedly wants a deal to boost the stock market. And then says, if Trump and the Fed are both inclined to cater to the whims of equity investors, which they appear to be interested in doing, that's bullish for stocks in the short run. So she's prognosticating, a very astute observation here, Miss Abramovich, is that there is a vested interest in by the president and the Fed. We talked about this last night. A lot of people saying the Fed is going to crush the stock market to get rid of Trump. That's a dual-edged sword because Trump is not the only one who's going to be blamed. If the Fed boosts up a bubble and then can't keep it going, well, then they're the ones who are going to be blamed. Unless they can figure out who else to blame for it, clearly you can put it on the Fed right now, because one of the things that a lot of people have noted about QE and lower interest rates is, well, once you decide you want to unwind the balance sheet, you want to raise interest rates, normalize interest rates, you're not going to be able to do it. You're going to crush the stock market, and therefore your whole QE and artificially low interest rates was nothing more than kicking the can down the road. Well, I think what they want to do is kick the can down the road as far as they can, so everyone forgets that there was any connection to QE. Think about when the stock market crashed in 1987. No one blamed Fed policies in the 30s. And if the stock market finally crashes in 2025, a lot of people won't even be around to remember that they did QE in 2007. It'll be 20, 25 years later. So I think they have a vested interest in pushing this thing as far as they can. Clearly, the president does. Clearly, all the politicians do, and the Fed does as well. And also, if you think about what Trump says, what does he say? He says, your 401ks are doing great. Your 401ks. Well, clearly a large segment of the U.S. population also cares about the stock market. It is not cheering for it to collapse. They're not subscribing to newsletters that are telling them that the stock market's going to collapse and that it's fake. They don't care. All they want is the stock market to go higher. They're not silver stackers. They're not gold stackers. They're not preppers. They're just people who go to work, make whatever they make, and want their 401k to go higher. Now, let's put that into perspective with what we've been talking about with the Plunge Protection, which is, I remember the name of it. It's the President's Working Group on Financial Markets. I said Financial Matters. I knew it was an M. Okay. Well, when Trump says your 401k, he doesn't mean your 401k stuffed with mining stocks or gold stocks or ETFs filled with Sprott gold or silver or GLD or even SLV. No, he's talking about your 401k that is largely made up of U.S. stocks. In fact, I asked a question today to the Smaulgld game changers on YouTube. Does your employer offer any type of precious metal options for your 401k? And guess what? Only 1 out of 30 or 29 people said that they do. And I've seen this in many employers. Most of them think that it's a problem. You do not want, and you talk to people who run these things, they have an aversion to precious metals as a 401k option. They believe that if they offer this to their employees, they could be sued because they're offering some type of risky, exotic type of investment that the people couldn't understand, and it's not a safe thing. Now, that almost highlights an institutional aversion towards the precious metals, because there's really no reason why a mining stock or a position in a commodity should be any more risky than buying Tesla or buying any of the FANG stocks. But we know that those stocks seem to have institutional support, whereas if you think about who promotes precious metals mining stocks, does Goldman Sachs have a research note on First Majestic? No. Does JP Morgan have a research note out on Endeavor Silver? No. They might have one on Barracks, but for the most part, these mining stocks are not, they're just not institutionally held or loved in the same way. And even though they make profits in the same way that a company that'll be the latest FANG stock will be, or unicorn stock on NASDAQ, will have institutional support, meaning that they were brought to the market by one of the Wall Street banks and they have research notes on them and so on. I'm not sure that, I wasn't picking on First Majestic or Endeavor. I don't think that they have the big name Wall Street investment behind them. I've never seen it. It's possible they do, but I'm going to bet that they don't because those are not names that you see running across the ticker on CNBC. So the point is that that's another reason. Not only do a lot of people say the gold and silver prices are manipulated, but the whole industry is not embraced at all. If you're gonna have, I think the view is basically, if you have to have, like, there's something wrong. Like, okay, if we can't convince you that you don't need to have gold, you don't need to have silver, do us a favor, just buy the GLD or the SLV, and we'll let you. That's fine. But even for purposes of the 401k, they don't even offer those in most employers. So out of the 30 people we have here, they say they don't offer that. And of course, putting your own IRA together, I don't know, 401, I don't know how you do it, but there's people who claim you can set up your own and put it in your house. I don't know who does that. I mean, that can't be very widespread. But speaking of Goldman Sachs now, having said what I just said, check this out. This came out today. Is Goldman Sachs the new gold pumper? Goldman Sachs analysts raised their price forecast for gold, predicting that the metal will climb to a level not seen since 2013. Now, Goldman Sachs is historically or notorious for making a public announcement or projection or that something's going to happen, and then the opposite happens, and they're doing the opposite, but they're telling the public to go long when they go short, or vice versa. That seems to be a commonly held. I don't know if it's true or not, but a lot of people always say that. I guess it came from the Muppets comment that one of the Goldman Sachs bankers made when he testified to Congress about how he called the clients Muppets, and that basically they would buy whatever they said. And a lot of people say that when Goldman Sachs goes long, you go short, and vice versa. I don't know if that's true, but that is somewhat of a stigma out there. And here they are predicting gold prices to climb to highest since 2013. Now, you would think if a major house like Goldman Sachs comes out with something like that on a day like today, that maybe the gold price would have risen. No. That statement had no impact on the market whatsoever. In fact, maybe the impact it had was it drove gold lower, going on the theory that if Goldman Sachs says it's going higher, then maybe it's going lower. I don't know, but I thought it was very interesting that Goldman Sachs came out with that. Now, we mentioned how Trump has clearly a vested interest in pumping up the stock market, the Trump pump, and we've noted that since the president's working group on financials markets convened on Christmas Eve, that the Dow Jones is up 11%. And that outdoes, obviously, the price of gold and silver as well. Well, Powell today, here's the Powell put. Here he is, whether he's been dressed down by Trump or he just realizes that he's got to slow it down a bit. He's got to slow roll a bit here. Fed's Powell again stresses patience on U.S. economies as U.S. economy's narrative unfolds. That narrative is about the stock market, not about the economy. And he appeared on Thursday, gave some speech to some economic club, stressing again the U.S. Central Bank can be patient. So there's no set path. We're patient. Before it was, we got 4 rate hikes baked into the cake, and we'll just see how it goes. We're just going to keep going. And now it's all this patient stuff. Why? That stock market was a bit of a scare. And now it looks like, and again, what this does to trader psychology is they start to think, buy the dip. Why? Because the Trump pump and the Powell put. They know that these guys are there to protect the markets. Swiss National Bank will come roaring in, maybe Bank of Japan, maybe not the Fed. The Fed supposedly doesn't have the mandate to buy stocks. But all right, well, let's see what you guys think of today's market action. All right, let's see. Not too many people here. All right, Powell, you know why we don't have too many people here? I started at 7, and I had I don't know, some technical difficulty. The When Lambo song just kept playing. It would stop, and then it would keep playing, and it was on an echo. Then I started to talk, and then it would loop what I was saying, so I just shut it down. All right. Pablo Pina says that's what he means by round 2. All right, I guess palladium is going to go down due to China car slumps, as Pablo Pina. That's an interesting point, and I know now that yes, indeed, that China has been making an effort to try to reduce population, reduce pollution, and by adding catalytic converters, of which you use platinum and palladium. So that's a good observation, Pablo. That could be the case. Scott Wardell. Merits as monetary, you pay off Philip for the topic. I have no idea what that means. That message is exceedingly simple. The Congress trash man. Well, I get that. Jojo Dirty says he came here for the mugs. All right, yeah, well, if that's the case, hold on. Cannot have people here not get what they came for. It's not that they're not getting what they paid for. It's just that they're not getting what they came for. So, if you came here for the mugs, here's one. Have that. Here's a mug shot for you. Martina Booth and Nomi Prince had a great tweet today linking how Powell has confused the markets so they no longer trust them. The Fed does this. This supposedly was the stated reason why my interview with Silver Doctors wasn't published, because they had suggested that I had inferred some type of malintent on the part of Powell, that he might be trying to manipulate or direct the markets. Now, I wasn't inferring that. There's a thing called Fed forward guidance, and they do that. They try to jawbone the markets by letting them know where they think the interest rates are headed. Now, I think they're both wrong, Booth and Prince. Look, I didn't read what they said, but your characterization, I think he's done exactly what he wants to do. I think he wanted to tell the market all last year that he was raising rates, and people took that in. And when they finally said, okay, well, you're raising rates, and we don't want you to raise rates, and if we think that raising rates is what you're going to do, we're going to sell our shares. And now, I don't think he's confusing the market. He's resetting expectations and saying, you know what, we're going to wait a bit. And that gets people happy. And why does he say we want to wait a bit? He doesn't want the stock market to go down. And so people come back. So I'm not sure if they no longer trust him. He's being relatively transparent. He's changed his point of view that he's not just going to hike rates 4 times this year. Pablo Pina, when the market looks uncertain, it's a good idea for the Fed chairman to not forecast long-term end time. That's right. And what he's doing is he's saying, I'm going to be patient. We're going to wait a little bit. We're going to sit down. We're going to look at some. And the other thing I was going to say, he's going to look at some data. He's not going to get a lot of data if the government stays closed, because that data is not going to come out. Mint Mark SI. My 401k at work doesn't allow precious metals investment, but it does allow investments in treasuries. There you go. Where my money is going right now and has been going a while until further notice. There you go. Not going to have a problem with that. They're not going to say, we don't want to get our people into treasuries because the U.S. debt is unsustainable and they have $21 trillion in debt. And China is going to crush the dollar. So we cannot allow people to have worthless toilet paper like the dollar and the U.S. treasuries in their 401ks. So we are going to recommend that they buy gold and silver mining stocks. They're not going to do that. Yeah, Pablo's saying, so gold close to 1,600 if that's what Goldman Sachs is saying. That's right. Shark Air, it's not just Goldman Sachs. A lot of the reports are designed to fool investors. Yeah, I mean, the idea of research, independent research, we learned from the .com days. I remember they used to have 5 ratings, and they were all positive. There was never anything called, there was strong buy, hold. There was nothing that said like sell, strong sell. They didn't have them that way. So basically, they're always pumping up the stock. And the reason they do that is if they're issuing the stock, underwriting the stock to put it into market, they don't want to trash the company. So if you only have a buy, like they'll reduce it from strong buy to buy. What does that even mean? Well, it means they're actually telling you you shouldn't buy it because it's not a strong buy anymore. But they're not telling you to sell it because that would create a panic. But when Goldman Sachs comes out with something like that and the market doesn't move, then what's the point of even saying it? Why are they issuing that note? Pablo Pina, I guess now when Trump will mention good things about gold, it will go up. Yeah, but he's not going to. That's the thing. They don't have a plunge protection team for gold. They don't have a president's working group on financial markets or on gold markets. They just have that for the stock market. Pablo Pina, you were pumping mugs and not Powell. Yeah, that's true. All right. Well, I want to thank everyone for joining me tonight. I'm sorry we got the small crowd tonight. I think half the crowd shuffled in at 7, and they were turned off probably by the initial tech issue that I had, or YouTube issue. So they didn't come back for the 7:30 encore. The first performance is only 1 minute and 22 seconds. But we'll be back again tomorrow night. I want to thank everyone for joining me, and we will see you tomorrow. Shark Ear. Yes, that's right. They use fake news to fool. That's right. I mean, yeah, it's not a good thing.